Well, I'll tell you, that time just flies by when you're having fun, doesn't it? Back to work tonight, guys and gals. Time is ticking. It's Wednesday evening. It's October 21st, 2020. My name is Joseph, by the way. And as always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Thursday's trading session. I got a jam-packed video in store for you tonight. Charts are all prepped up in the background, as you can see. Got the Eminis, we got the oil, and we got the gold on our radar for tomorrow. Lots of great setups we're tracking for a very big, important Thursday's trading session. Before we jump in, though, and get our hands dirty on those setups for tomorrow, I just want to make sure to remind you guys to make sure you subscribe to our YouTube channel. If you haven't done so already, make sure you subscribe. That way you don't miss all the good stuff we publish every evening on this video. And don't forget, if you have any questions for me, you can drop those questions for me in the comment section below, and I'll get them answered as soon as I finish up tonight's lesson. And as always, if you guys tune in every evening, if you like this video as much as I enjoy making this video for you guys and gals every evening, I really appreciate you guys hitting that thumbs up button for me on this video. So don't forget to subscribe. Drop those questions in the comment section. If you guys have any questions, I'll get them answered for you once we finish up. And as always, I really appreciate you guys supporting this channel by hitting that thumbs up button for me here on the video newsletter. But enough of the introduction. Time is ticking. Let's get this video going. We got some pretty interesting charts in front of us here today. Got a little bit of trickery going on here. Tomorrow's a pretty big news day, of course. We got some big news on the schedule. And of course, we got some, from what we're being told, possibly an update on that stimulus package. Now, looking at the charts here in front of us, we get the gold, right? Gold's range bound. No surprise there. We got gold all buckled up inside a range. It's a really narrow range on the gold, which is not surprising because, of course, we're waiting on this stimulus announcement if it ever comes here, right? I'm sure you guys are tired of hearing that word out of my mouth right now. So a narrow range on gold, that means big breakouts, and that means momentum is going to be a factor for tomorrow. I'll talk about, I've got one specific entry pattern I want you guys to look for tomorrow on the gold because of that narrow range. Over on the oil, right in the middle of the screen here on the oil. Boy, oil took a tumble today, didn't it? They finished off that pendulum swing, right? We talked about, right, shorting the pops last night, and of course we got the big drop today on oil. Not a huge surprise to see it go lower, right? Big move down today. But this one thing on the chart, right, you can see it. They missed the trap. There was no trap there. I thought for sure there was going to be that two-try trap pattern. That is a very important clue. If you're an oil trader, we're going to dig into that in a lot more detail for exactly where I want to be getting short tomorrow here on the oil. And then how about that S&P? Boy, S&P continues to grind sideways, right? We continue here to fade those pops, right? Sell into those pops right now on the S&P. So relatively easy plan here. The range on the E-minis, the big move down on oil, and that narrow range on the gold. We're going to put all the setups together here in just a moment. Before we jump into those charts, though, I just want to make sure we take a look at the calendar for tomorrow. Now, of course, there's a Thursday's trading session. Tomorrow, as I mentioned earlier on in the week, tomorrow and Friday are kind of the big news days of the week. If you recall, this is the fourth week of the month of October, so it's a relatively light news week. We've been talking about that here right throughout the week here this week. You'll notice tomorrow, though, Thursday, we get the jobless claims at 8:30, and we got existing home sales number at 10 o'clock. Both of those news reports are pretty darn potent, so we definitely do want to be at our desks early for that jobless claims report, and definitely stick around after that 10 o'clock hour because you've got the existing home sales number. The best moves we've seen lately have been in that 10 o'clock to 11 o'clock block, right? That kind of latter half of the morning session. So definitely want to get there early because of jobs tomorrow at 8:30, and of course we got the home sales number at 10 o'clock. So definitely don't leave too early because we might get a late morning run there, either up or down with the existing home sales number. Those are the two big news reports that we know about tomorrow. But of course, unless you've been living under a rock or you haven't done anything on the internet in the last few days here, we also know the world is pretty much waiting on, will we finally get, right, some sort of update regarding this stimulus bill. We heard from both sides of the aisle today. It sounds like they continue to get closer and closer in the negotiations. We can definitely tell the market, like the S&P, right, flatline, Gold jumped up today, so we definitely have a feeling, right, that gold kind of tipping us off here for a possible stimulus announcement tomorrow. We'll see. This is the topic that keeps kind of tormenting traders right now, right? Is this? And I laugh because it's been happening on and off for the past couple of weeks. But that stimulus package, right? Will we hear some sort of definitive information here tomorrow? We heard from both sides today. Will we hear tomorrow? That's the big variable, right? That is a big variable for tomorrow. That stimulus announcement is on everyone's mind tomorrow, and that may continue to make these markets act a bit squirrely here this week. So again, will we hear more about stimulus? We shall see, but make sure though, again, get to your desks early tomorrow, 8:30 Eastern time, of course, is probably our bigger news, that jobless claims report, right? We'll see those numbers come out tomorrow morning at 8:30 Eastern time. Now don't forget, tomorrow and every morning, 8 o'clock Eastern time, we'll be right in our trade room. I would love to have you there trading right along with me, right in the trenches with me tomorrow. We'll prep the charts tomorrow morning and we'll execute the plan together. What I'll do is I'll put a link for you guys down in the description of this YouTube video. Grab that link down there, head over to the website and get registered as a new member for tomorrow morning's trade room. Again, I'll put all the important links in tonight's video down in the description of this video here tonight. If you're on the blog at Sideways Markets, I'll put a big button for you right below me tonight on this video on the trading blog. So grab that button below the video or grab that link in the description and make sure you come out and join us every morning, 8 o'clock Eastern time, right, in our trade room here at School of Trade. Let's get back to those charts though, right? So big news tomorrow, 8:30, home sales numbers at 10, and will we hear more about stimulus tomorrow? I certainly hope so. I think I probably speak for all of us. I certainly hope so. Get this thing out of the way so we can get these markets start to, oil of course moved today. E-mini though, definitely still seeing the effects of this kind of pending stimulus. You can definitely tell gold is curled up here in a ball here right now. Now, let's grab the E-mini first. Let's jump into the E-mini here first tonight. Not a lot of new information on the E-mini S&P. We talked about this last night on the newsletter. We have a big move down on Monday. We know those bears, right? They are trying to retest those lows right now, right? The bears, their big goal right now is to get back down to that 34.10 and 3/4. But as I mentioned in last night's newsletter, we have the big elephant in the room right now, right? Is this trading range? So the range really is the most important feature or most important clue on this chart right now, because anytime we have a trading range, our goal is to buy low at support levels below the range, sell high at resistance levels above the range. As I mentioned in last night's newsletter, because we have this bearish bias to everything, our goal really is to keep on selling the pops, right? Shorting the pops, waiting for price to go up, right? And selling it back down. That's kind of the general strategy here for tomorrow. And you can see that's pretty much exactly what's been going on ever since Tuesday's trading session. So we'll continue with that strategy for tomorrow. It's worked fantastically well, right? Around those highs, right? So far. The one thing I want to kind of make sure you're aware of is if the market rolls lower, we've really got to be careful, because remember, the range will act as a magnet. Right? Ranges always act as magnets. And not to mention the low, right? The bears, they want to get down to retest that 34.10 and 3/4. So I can't really justify selling below that trading range. So what I'll have to do is we're going to really have to see this thing roll over and run if we're going to want to commit to new shorts below that trading range. So the bottom line is we're bearish. We are overall bearish here right now on this S&P, but we are range bound, right? We are definitely range bound. So my plan of attack, whenever I have a trading range with a bear bias like this, I want to get up into some of these areas of resistance, right? Get up into some of these swings. You'll notice we have yet to take out any of these prior swings, right? That one was close, but you'll notice none of these swings have been taken out yet. So I would imagine there's going to be a lot of bears waiting above all of these swings up here. So keep your eyes right on this area above. I've got this trend line coming up overhead as well. But really, let's just get above some of these highs up here, right? Get this thing to pop up. Now, if we can get this thing to pop up, right? Look at this pattern to the left of me here over here. Right, if we can get this thing to pop up here, what I'll do is I'll look for buyers to come in and try to get long off the moving average. If the buyers come in and commit off the EMA, right? See back here, they go up, right? They come back, they commit off the moving average. Once you see that, then you know where stops are, and you can sell right into those stop losses and take this thing back into that range. Remember, the range itself is a magnet, right? So we're trying to go up and bring it back down again. The hard part with ranges is that the hardest part really is that when a market pops up, you don't really know how far it'll keep going, right? So I don't really like to try to predict the top. It's much easier for me. It's much easier for you too. I'm not trying to sell into it as it's going higher, right? That's a really dangerous game because you just don't know how high it's going to go. I'd rather wait for it to pop, wait for those buyers to come in, get them to get long off the moving average. Once they do, now I know exactly where their stops are, and I can use what I call my failure pattern to get short off the high. And again, you can see lots of examples, failure patterns, right? Failure patterns. Now, one of the things we saw this afternoon was this little shallow guy right there. So what if we don't get that big push up, right? What if we don't get that big pop higher? If all we were to get was to get a little, right, just a little pop higher here, you can still look to use that range as a magnet, but now what you want to do is you want to think about traps. Right? Now, traps are really the go-to entry pattern whenever you're concerned with buying high or selling low, right? Like in this example, right? So if we can get that big pop up, I'll gladly look for that buyer failure and send it back down. But if all we do is get a little tiny jump, and I mentioned that because you can see an example right here, right? You can see how they go up, they pull back, they go up, and see how they just little trap high right there, right? That's the same type of pattern that you want to be looking for right over here. So, but bottom line is, if we can get a deep pop up into some of these areas, buyer failures. If we see a shallow pop, right, again, using the range as a magnet, we're looking for those trap patterns. Now, of course, I want to stay out of the middle. You know, that's always one of the hardest parts about this, right? Stay out of the middle. And then what if this thing rolls over, right? What if it rolls over here on us? What can I do, right, if this market rolls over? Because again, we got to be very careful because that low at 34.10. So, you know, we might easily see this thing start to run lower, but then come snapping right back up. Remember, the range, right, is a magnet. So we need something that breaks us free of the range kind of magnetic field, right? What would be a good pattern to break free of that? Well, what I always look for is what I call a 1, 2, 3 breakout pattern. I first want to see a strong move down. Then I want to see a pullback to the moving average and a strong jump off the moving average. Now, I realize I would love to sell that first pullback, but the problem is just because a strong move down, they don't always work, right? So as much as I would love to take, right, that strong move down and sell the pullback, strong move down, so as much as I would love to, I just can't trust that first pullback. So if I can get a strong move lower, if I can get these bears to finally hold on to that pullback and run, yeah, now we've got momentum on our side now. Now we've broken free of that magnet, and now I can mark the low, I can mark the high, and I can look for my short off the high of that hidden channel. Now, targets as we go lower, right? The target right now for the bears is to go back down to retest those lows, right? If we go lower, though, look at all the wide open space you have below that 3,400. I mean, it's a tremendous move back down. So there's a lot of dollar signs down there if we can get this thing to break free of this trading range. Now, there's one more pattern. This one's a little more advanced. If we see a very strong move down, right? Let's just say, for example, the headline says no deal on the stimulus, right? And the market really starts to tank. If it really starts to tank on the way lower, keep your eyes out for that 2-try trap pattern. It's a very strong move down, a shallow pullback, a lower low, and then watch that trap, right? It'll be a trap right above that high. This is the pattern that we're waiting for on the oil, right? We're going to grab oil here in a second. This is the pattern that everyone's waiting for on the oil right now with that big move down. Now, always keep in mind, I'm always trying to find some sort of hidden channel that I can combine the top of that entry with, right? If it starts to really run, again, get those bears to come in, shallow pullback, lower low, trap high. I call those 2-try breakout patterns. So now we know the plan. We know how to trade the failures, right? This is how to sell the pops. We know how to trade the breakouts. And, speaking of breakouts, I cover all the breakout patterns, by the way, in our free trading classes. We cover all my favorite patterns, breakout patterns, failure patterns, trap patterns. They're all covered in the free trading course. What I'll do is I'll put a link up here for you guys in the upper right-hand corner. Grab that link, get registered as a new member of the free trading course. Pause the video if you got to, but make sure you get registered for the free classes. That way, when you come back and see me tomorrow night on the next edition of our newsletter, you'll know what I'm talking about when I say failure patterns, trap patterns, breakout patterns. And I'll send you a lot of examples of how we apply those patterns to our favorite futures markets as part of that free trading course. So definitely grab the free course in the upper right-hand corner. That way you're armed with the knowledge, right, for next time. Now, last but not least, how do we buy this market? Is it possible to buy this S&P right now? Well, here's the deal. If we go lower, momentum is very, very strong. So the only way I can buy this market would be what we call a nested failure. And that would be bears try once, bears try twice. And I always like to look for a trend line coming up off that second try. That'll be one we'll have to wait for. Right? Now, this pattern, I'm going to talk about this pattern a lot on gold tonight. All right? So gold is ripe for a nested reversal pattern or nested failure pattern as well. So if we do head down, right, we take out those lows, bears try once, bears try twice, we can then look to be a buyer. And again, I always want to try to buy at support, which is why I like to draw that trend line. Now, sometimes what happens is sometimes the market will do this. It'll run to those lows, right? It'll go one try, it'll run higher, right? And then go 2 tries up here. You're not going to want to get too aggressive on that one because now you're buying really high. In those situations, if the bears try once and they run higher, what I look for is I look for a trap entry after that second try. So just kind of keep it in mind, right? I'm looking for two, bottom line is we're going against momentum at this point, right? So I've got to be really patient because you just don't want it to walk in front of that freight train. Again, as the market goes lower here, look for those bears now. Look for them to try once, right? Ideally, you want to go lower, try once, try twice, grab that trend line, and go from there. But if they jump off that first try, the key is just don't chase after it. And if you don't want to buy high, which is what you're doing if you chase after it, the best entry pattern is that trap, right? That trap low just below that low. So some food for thought there as the market goes lower. The easiest way to be a buyer on this would be to wait for a reversal, right? Wait for a reversal. Wait for a strong move up. Look for the pullback to the moving average. And remember, right, look left. If that's not a strong enough move to break out, I don't know what is, right? So remember, you don't want to go trying to predict that breakout. Hold the pullback, go from there. That creates the 1, 2, 3 reversal, 1, 2, 3 breakout pattern. A lot more reliable, and I can now mark the high, I can mark the low, and I can now get long. That's when I can get aggressive, right? Buying off the low of that new hidden channel, right? I'm not trying to buy the first pullback because again, right? Those are unreliable, right? We're looking to short the failure of that first pullback, right? Sell the pops. But if the buyers can hold it, if they can prove to us they can hold that pullback, then I've got it all structured and I know exactly where I want to buy on the follow-up. Now, of course, the targets at that point, where's my targets? Targets are pretty easy at that point. Got a big, juicy range up there, just shy of 3,500, 3,495, right? We'll call it 3,500 is pretty much where those buyers are trying to go. So a pretty straightforward idea here, a pretty straightforward plan here. Sell the pops. Be very careful trying to trade breakouts, right? If you're trying to be a buyer, wait for proof, either from a nested failure at the low, right, or a 1, 2, 3 breakout at those highs. And again, pretty much all of these patterns, including that nested, the nesteds are always the ones that are a little bit tough to wait for because, we always want to jump in so quickly, right? The nesteds, I cover those, of course, in that free trading class linked up in the upper right-hand corner. And again, right, if you want to skip the line, right, skip the free classes and go right to the trade room tomorrow morning, I'll put all the links for you guys in the description of this YouTube video. All right, we're looking good. S&P, we got you ready to go here. How about some oil? How about some oil? So big move down in the oil today. Yeah, we kind of saw that coming a mile away. I don't think that surprised anybody, right? I think the only thing that was surprising was how far it went so quickly. But we were talking about this last night, right? The high of that range, looking to short, right? Looking to short that buyer failure, right, and run it lower. So hopefully you watched last night's newsletter and you were ready for today's trading session, right? A very nice move there on the oil. You'll notice though, big strong move down, right? They got their pendulum swing as we talked about, and they're pretty much hanging out right now around 40. Now, whenever I see a big move like this in one day, usually the next day is going to be a range. So just be aware of that, right? Usually whenever you see like, whoa, that's a big move today, usually when you see one of these kind of straight line moves like this in one session, usually the market kind of has to catch its breath almost, kind of figuratively speaking, catch its breath. More importantly though, traders are not going to want to sell this low. Right? They're not going to want to sell this low on the chart. They're going to want to wait for opportunities here to, as we mentioned last night, right, sell the pops, right? Selling into those pops. And that is where, that's really where we get the biggest clue here, because as you look left, you'll notice we had that, right? We had that strong move down, that shallow pullback, that lower low, right? That two try trap pattern, they never got it. So that's a really big level there. There's I would imagine, a lot of unfinished business, right, on that 40-46 area. So that's going to be my sell zone up there, just above that 40-46 area. Now, I should also mention, too, we also have a trading range, right? That range, right? The range is a magnet. So as much as I would like to see a pullback into that 40-46 area, we may also see, right, a relatively deep pullback here. And I almost hope we do get that, right? Because the bigger the pullback, the better. But with that deep pullback, we really got to be careful because momentum becomes a big problem as well. So we got a bears in control, right? We can obviously see we're bearish. I don't want to sell low down here because, again, I don't think you're going to see a lot of bears that want to sell down here. It might, right? It might keep on grinding lower. But my job right now is I want to sell the pops, right? Because I want to try to find a way to sell up at resistance levels here as we go into tomorrow. And I will keep my eyes open for this to be a trading range. So a couple scenarios here. Right? What happens? What's the plan if it goes sideways, obviously? If we go sideways here in this range, and I would anticipate that tomorrow. I would expect there to be a range here develop overnight. I would anticipate that for tomorrow. We're back to a very prominent big round number at $40 a barrel. So if we start going sideways, right, we keep seeing double tops and double bottoms. What do? We find levels of resistance above the range, and we combine those levels of resistance with what I call failure patterns. And we talked about this on the S&P, right? The S&P, I'm looking to sell the pops on the S&P. As we try to get that, right, eventually the bears will run out of bullets, as we say. And when they do, I'm hoping the market pulls back. I'm hoping that buyers try to buy the pullback off the moving average, and then I'd like to be selling right into those stop losses. Right? So imagine, right, the bears run out of bullets, price pops up off that low because nobody wants to sell that low. And of course, what happens now is, right, buyers think, okay, we're going back up. Because remember, right, that was a range yesterday. The problem, though, is this is so much momentum right now. I will be surprised if they're able to get a full reversal on this without any stimulus announcement or some sort of fuel, to make it happen. All things equal, whenever you get this much momentum and the range has been expanded that much, there's a good chance that range will get moved down, right? So this range that was here from yesterday gets moved lower here. Again, maybe I'm wrong, but usually when you get this much momentum, it steamrolls lower. You can expect a new range to form the following day at a lower price. So if I can get this pop off the low now I'm hoping we'll get buyers try to commit off the pullback. Once we do, we can sell right into those stop losses, drop those orders in as it collapses back down into that trading range. The other scenario, right? I remember too, is right? If we really pop, right? If we really pop, because we got that range up there, right? And so that little range could easily act as a magnet. All ranges are magnets. It's tough to tell whether or not we'll be able to get that much of a pop here. But let's just say, for example, we really jump, right? If we really jump, and the market tries to get up around that range, that's great. But now we've got momentum as a problem, right? And what you want to remember is anytime we see a strong move in one direction, you're probably going to see the buyers try to get another leg. And so in these situations, and again, we're going to talk a lot about this on the gold tonight as well, but in these situations, if I see a really strong pop, right, now I look for what I call a nested failure, which we talked about to buy the low of the S&P, right? Buyers will try once, buyers will try twice, and I always like to grab a trend line off those highs and look for that trend line, right, or look for that short off that trend line, right? Buyers try once, buyers try twice, and we're selling into it. Again, this is only if the market really takes off, right, and really gets up into that trading range. Anything else shallow of that, anything else up inside the sell zone, I'll still be looking for buyer failures, right, and running back down again. So if it does pop, right, if it does really pop here, up towards that range, let those buyers try once, let them try twice. My favorite is to use that trend line off the high, but there are nuances to these patterns. You know, for example, sometimes you'll get this where it'll pull back sharply and go lower like that. In these situations, you don't want to chase it as it goes lower. I like to look for those traps, right, above the highs there. That's the same basic idea, right? Buyers are trying once, buyers are trying twice. But the problem with that is you don't want to use the trend line in that situation, right? That will cause you there to sell too low. Remember, you want to sell high as you can, right? So again, you can see the difference here. Oh, hold on, sorry, wrong button there, right? Strong move up, right? If we pull back to that moving average, buyers try once, buyers try twice. If I can sell off that trend line, I'm selling at resistance. I'm selling nice and high now, right? No worries about that. Nice big risk to reward ratio. It's a very high probability trade. But if the market jumps up, we then pull back. Again, the assumption is strong spike up. Now as we pull back, one try for the bulls, pull back now, two try for the bulls. That is no longer me selling high, right? That's no longer me selling high. So in those situations, what you want to do is you want to try to look for that pop up, right, and get short up around that prior swing or as close to those highs as you can. There's a couple more advanced tactics to this. I'll save that for tomorrow morning's trade room, right? There's a couple other variations of this pattern, but I just want to make sure, remember though, when it really pops, look for that nested failure, right? Look for that pop, 1, 2, and then back down we go from there. So now we get a pretty good plan, right? If we go sideways, remember, stay out of the range, right? Stay out of that range, wait for the pops, sell the pops, right? Short those pops with buyer failure patterns. What if we keep grinding lower? Right? What if the market keeps on grinding lower here? What do we do at that point? Well, keep in mind, there's a big low down there at 39.33. 39.33 is that big low. I would imagine that's kind of where these bears would love to get to. So there's definitely a possibility here, especially with a delayed stimulus bill right now. The market could easily keep grinding lower. If we keep on grinding lower, you have to think that once we get any pullback off this low, you've got to think sellers are going to be coming in to gobble that up, right? Like it's the last time they'll trade this market in their career, right? So if we do keep going lower here, the problem is we haven't seen a very deep pullback. We haven't seen any traps yet. So professionals are going to be weary, right? Short-term professionals are going to be weary as this market keeps on rolling lower, right? It's going to be a bit challenging to tell how far it will keep going. At any moment, it can pop up. That's what I'll wait for, right? If the market keeps on grinding lower, I'm going to wait for the pop. I'll wait for these buyers to think this thing has reversed, and we'll keep on looking for those buyer failures, right, into seller pullbacks and a retest of that low, right? Buyer failure above the moving average, bear pullback, right, below the moving average. A very, very common, what we call trade combination, right? A failure into pullback combination. So again, if the market does keep on grinding lower here, or it's selling the pops, right, with those buyer failure patterns, and I talk a lot about failures right now because of ranges. Don't forget, you can see a lot of examples of how we apply failure patterns to our favorite futures markets as part of that free trading class. So grab that in the upper right-hand corner. Now, of course, at this point now, we're waiting on the range, we're waiting on the pop. How do we buy this thing? Right? How do we buy this thing right now? Is it possible? You could. We definitely can, but we got to get what? We have to get a reversal, right? At this point now, we know we are technically at the low of that big expanding triangle. But again, I am definitely not in the business of trying to buy into that freight train. So we're going to have to see reversal. Right? And there's one very reliable reversal pattern, and that is that strong jump up, that pull back off the moving average, right? And that jump off the moving average, right? What do we call those? We call those 1, 2, 3 reversal patterns, right? You can also see them quite a bit. 1, 2, 3 reversal patterns, right? Sell off the high of that channel, right? Remember that from last night's newsletter? Same idea here. If we go higher, strong move up, pull back to the moving average. Again, we're looking to short the failed pullback there, but if they can hold that pullback and jump, yeah, well, now we have that reversal, mark the high, mark the low, right? And now it's time to get buying off the low of that new hidden channel. Where is our target at that point? Our target is back up to retest those highs at 41.90. So just like a 1, 2, 3 reversal going lower, right, says sell off the highs, right? A 1, 2, 3, again, strong move up, pull back to the moving average, mark the high, mark the low, says buy off those lows. Targets, of course, now on the way higher here. All right, guys. So pretty easy plan here on the oil. I would love to see a pop up here, but again, anticipate a bit of a range there for tomorrow. So S&P's plan is in the books here. We got the oil ready to go. All right. Probably the most difficult market for tomorrow is going to be the gold. You know, I talked about this last night as well. You know, we are bullish right now on stimulus optimism here. You know, you can definitely tell that gold is optimistic about a stimulus package, right? Because if it wasn't, it'd be bearish right now. You know, the reason why I say that is, right, when they inject stimulus into the economy, whether it's, you know, printing money or buying bad debt, whatever it is, when they inject more cash into the market, it makes the current cash less valuable, right? It's simply becomes more readily available, right? Supply increases. And because of that cash becoming less valuable, the price of gold, right, inherently becomes more valuable. So more stimulus, higher gold, right? Less stimulus, less cash, right? That, of course, right, leads to more demand for cash, which, of course, drops the price of gold. So a little bit of a kind of an econ 101 there, right? So gold is bullish on the optimism right now of this potential stimulus deal. And you'll notice we have two trading ranges here right now. And this is probably going to be the biggest, this is one of the big reasons why this is a bit challenging, is we get two trading ranges, right? There's one range right here and one range right here. If you were to combine these together, and that may be exactly what happens tomorrow, they may kind of bleed together here, right, into one big trading range. We'll see what happens. I will tend to be, I'll default to the most recent range, of course, here, right, in this video, but that may happen for tomorrow. We're bullish pretty much into a trading range. What do we do in a bull range? There are really three basic patterns, right, in a bullish market into a trading range. I look for failures below the range, right? Find a level of support. That's always very important. Find a support level below the range. Wait to get the pullback, right? Look for those bears to come in, get short around the moving average. Once you see them commit, now you've got their stop losses, right? Now their stops are sitting ducks, and I can buy into those stop losses. Again, these are failure patterns. Whenever I think about a range, I think failure patterns, right? I also think breakout patterns. Now, we don't trade we do, but not, we don't try to predict breakouts, right? That's a game for penny stocks or rookies, really, right? Predicting breakouts in liquid markets like futures, like these markets, are not going to be very effective. So the range acts as a magnet, right? Remember, the range acts as a magnet. So when we go below the range, we're going to buy below it and use the magnet to help out the trade, right? But as it goes higher, though, we got to put the rocket boosters on. We have to break free of that magnetic field, if you will, right? Just like the space shuttle, right? They gotta lift off, get away from that magnetic pull from the planet Earth, right? So we got to get some strength going higher here. I can't just buy as it goes higher. I got to wait for a strong move up, and then I have to make sure those buyers can hold that pullback and jump, right? What is that called? 1, 2, 3 breakout. Now, sometimes what happens is sometimes it's a very small breakout higher, and it holds the pullback, and it jumps. So the first leg up doesn't need to be very strong, but they've got to show some strength coming off the moving average. Once they do, then mark the high, mark that low, and I'll buy the low of that hidden channel, right? So 1, 2, 3 breakout into hidden channel pullback. 1, 2, 3 breakout into hidden channel pullback. Now, the second breakout pattern, I told you 3 patterns here. The second breakout pattern starts off with a very strong move higher, right? This one has to have a strong first leg because you got to get that separation with the moving average. You basically have to put so much momentum behind it that it's almost a guarantee to get another leg, right? Got to get away from that range. Now, in this case, my favorite way to trade those big breakouts, we don't want to chase it. We want to wait for a shallow pullback, right? This is the giveaway. The giveaway is the shallow pullback, the higher high in price. That shallow pullback creates nasty FOMO, right? It creates FOMO. It does, right? It means that nobody got the deep pullback, and they're going to want it. So the next time it pulls back here, you'll see a lot of buyers come in, and they'll really hit it hard. We call those 2-try breakout patterns. So these are ultimately the 3 patterns we're looking for here on the gold. Okay, now take your screenshots if you want. Pause the video. I cover all these patterns, by the way, right, in that free trading class, like I mentioned right before. And you'll see more examples of these patterns on real markets, right, in the free trading class. Now back to our chart here now. Okay, now here's my challenge. Okay, the range itself is very narrow. Now, why is a narrow range a big problem? Well, because if I get let's say, for example, I have a small swing right there, right? Remember, I want to find support levels below the range. So if I look to buy below that range with a seller failure, can I get a very good risk-reward ratio here? Is there a good risk-reward ratio? What do you think? Can I risk small to earn large? You cannot. Right? So I've got to get a really deep pullback. I have to get a relatively deep pullback if I'm going to want to buy below a really narrow range. Right? So what I'm looking for here is I've got to get a good distance away from that area in order for me to be able to justify taking that trade. And this may not seem like a big deal, but remember, we are the byproduct. We leverage the wisdom of crowds, right? The self-fulfilling prophecy is a better way to say it, right? The more people are interested in it, the better the results will be of that trade, right? The higher the probability will be for that trade. If I can get in with a small risk compared to the available reward, that's a very desirable trade. And the people that actually move these markets, the big traders in the markets, they're going to take those trades with you, right? If you take only shallow pullbacks, you're trading next to rookies, right? Only the rookies get caught up buying really close to those ranges because they don't know any better yet. And the problem is rookies are trading 1 or 2 contracts. You get that nice deep pullback now, right? Get that deeper pullback, right? And then get that sucker back up. Now you've got all the deep pocket traders, right? Now you got the 100-lot traders. That's what they're waiting for because they've been around the block for a while, right? They know better than trying to trade those shallow pullbacks. On top of that, you can see, just by looking at the chart right now, I have a trend line coming down. I have a measured move right down there. And I've also got a pendulum swing, right? All of these are very simple techniques around the trading range, right? Got my range. I can easily measure 1 leg, 2 leg. That puts me down here. I can easily measure that trend line, right? And I can measure the amount of the move above the range to below the range. So this area down here is my sweet spot. It really is. The only challenge is that if we get that roll over, and again, it's kind of a big if right now because We have the, again, potential stimulus package, right, announcement coming tomorrow. Who knows? Could be tomorrow, could be Friday as well. If we roll over here and go lower, we are what's called rotating off the highs. And if we rotate off the highs, the market becomes pretty bearish, doesn't it? You can see it for yourself, right? If we go lower here right now, if you didn't know this range was there, right? If you didn't even know that range was there, you would probably swear that's a reversal, wouldn't you? I would. I would look at it as a pretty strong bear move down, right? Now, what's the problem? The problem is if we get that, and again, it's not actually a strong move down, but it is as it rolls off the high. So the moral of the story is we need to be able to absorb that momentum. So as the market goes lower, right, I'm now looking for that. Remember that nested pattern we talked about on the S&P? Right? Remember on the S&P, right? S&P, that big range. We wanted those bears to try once, try twice. We were talking about drawing that trend line off the low, right? Yes, that's exactly the pattern that you want to look for in this scenario. On top of that, you've also got that range down there, right? Which is going to try to drag this thing down as well. This will take some patience. It'll be worth it though. Right? So as the market pulls back, let the bears try once, bears try twice. And again, I'm trying to buy off of a support level, right? So once those bears try twice, buy off that trend line. If they really run it, we come back. And this is where some of the nuance comes in. If they really run it and the bears try once and they jump up, right? Remember now, that trend line doesn't help me anymore. Right? It's a good trend line, but it doesn't help me avoid the problem. The problem is buying too close to the range. So in those scenarios, what I'll do is I'll mark up these lows and I'll look for that deeper pullback and try to get it off of that support level. Right? Traps are great down there as well, but you want to wait for those two tries and try to buy it as low as you can. That way we're not buying too close, right, up into that trading range. That makes sense, right? So that's probably the trickiest part of tomorrow's trading session. Now remember, if they take this thing lower and they hold that pullback, because you might be wondering, okay, well, when does it turn bearish? If they hold that pullback and run it, now it's a bear market. Now I can mark up that low, I can mark up that high, I can sell off that high now with pretty good confidence, right? Targets of course down at that low from today, and then honestly, if this thing turns into a bloodbath tomorrow, right? You got that range from not yesterday, right? But what? From Monday, right? From 1900 there. So think about the 1900 if this thing really turns over here. Again, that would be a no stimulus announcement tomorrow, right? Would probably cause that market, right, to roll over, right? No stimulus, bad for gold here. Yes, the stimulus, right, good for gold tomorrow. Now, talking about, right, possible stimulus headlines here, what if the market jumps higher? Well, first of all, you got to make sure you know where you are. 1939.5 is as you can tell, it is a major top. In fact, it's pretty much the monthly highs here. If we can get above that 39, look at all the space we have up there until 68. There's a lot of dollar bills, right? Or euros or pounds or kiwis or whatever you're trading over there, right? There's a lot of that to make up there. The challenge, though, of course, is we have that trading range. Right? The challenge here is the range is the magnet, and I've got to make sure, if I can get my chart to look good here, I've got to make sure I get those rocket boosters, right? So remember, it's not enough to get a strong breakout. It's not enough to see a strong move. We've got to get that pullback and jump. Really show me you want it. Show me that jump off the moving average, then I can mark the high, I can mark that low, right? And we can look for that buy off that low, all right? Get that 1, 2, 3, a breakout in this case, right? Or, right, as we go higher here, strong move up, right? Shallow pullback, higher high, and that trap low from there. But again, remember, this pattern has to be very, very strong. Now, how do we sell it off the highs? Could I sell off the highs? You definitely could, right? You definitely could. The problem we have is we're bullish right now, right? So the price goes higher here and just gets up into that area overhead. How do I sell that market? Well, first of all, it's a range, so I'm focused on a failure pattern, right? Failures and breakouts. If we don't have that 1, 2, 1, 2, 3 breakout, what would be the pattern we look to sell it? I would have to use one of those nesteds, right? Let the buyers try once, let the buyers try twice, grab that trend line, right? Just like we talked about earlier on this video, right? Once, twice, sell it back down from there. Why do I wait more? Because of momentum. Momentum is too bullish just to sell into it, right? Buyers are probably not going to give up without a fight there, right? So let them try a couple times there. And again, be aware, right? Be aware if it comes back down in real quickly here, keep looking for those traps to make sure you're not trading like a rookie, right? Enter like a pro tomorrow morning, selling high up at resistance above the high of that trading range. All right, guys? Again, careful tomorrow on the gold. We know how to trade the reversal. We know how to trade the pullbacks now. All we need now is a few more candlesticks. So don't forget, hopefully by now you've hit the thumbs up button in the video. Hopefully I've earned a subscribe. I hope at this point now, if you're still watching right now, you subscribe to our channel. We put these videos out every day, Monday through Thursday during the week. And of course, I hope I'll see you tomorrow morning in our trade room. Tomorrow morning, 8 o'clock Eastern time. We do it together every morning, right before the opening bell, 8 o'clock Eastern time we open up. I'll put all the membership links. I'll also put all the free trading class links in the description of this YouTube video. Don't be afraid to call the office. Don't let my ugly mug scare you away, right? Call the office anytime you guys have any questions. I'll be happy to answer all your questions. We got live chat on the left, live support on the right. So if you have any questions, drop those questions in the comment section below, or just pick up the phone and give me a call here in the office. I'll be happy to answer all the questions. I love talking to you guys here, right at the corporate headquarters here in Los Angeles. So guys, thank you so much for being here. Thanks for watching. Hope you'll subscribe. Hope you'll like the video. Hope you'll share it with a friend. And I hope you'll see you guys tomorrow morning at the opening bell, and we can do it all together. In the meantime, though, tomorrow morning, will we see more stimulus? We'll find out. I will see you guys tomorrow night on the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.